Okay, let's get going. It's 3 minutes past the hour, and we are going to talk a bit about Signal Center, um, talk a little about the signals and how they can help us. Um, Before we start, though, let me just show you this short disclaimer. Okay, let's go ahead then. All right, good. So, what are we going to talk a bit about today? Well, essential factors for traders. How Signal Center helps to solve some of the most pressing issues for traders, and also why ThinkMarkets have actually partnered with this firm called Signal Center, because there's so many of them. There's so many signal providers. I'm going to talk a bit about that, and then we're going to talk a bit about the performance and obviously how to use the signals. The whole presentation is going to take about 25 minutes or so, and after that, I'm happy to answer any questions you may have. So who am I? Well, my name is Alejandro Zambrano, and I am the former chief market strategist at several major licensed brokerages. I'm based in London. I've been living here for about 15 years. Before that, though, I was actually born and raised in Sweden, where I studied, and I actually started working in the financial industries, financial industry back then. And I actually started to work for a broker in 2005 and started to trade with a real account in 2006. So I have been trading forever, it feels like. So if you have any questions, then you definitely want to ask me them today. I probably done a lot of the mistakes you guys have done, and probably maybe some of the mistakes you might do in the future when it comes down to trading. So you're most welcome to pick my brain. What else? Well, yeah, I started trading in 2006. I am a profitable trader, and I do help and work with brokers like ThinkMarkets, helping them to introduce people to trading. I have studied economics as well, so I have that in my background. And yeah, professional analyst, that was in 2009. And I've been to many parts of the world, like the Philippines, Mexico City, Sweden, Italy, Greece, Lebanon, not on holiday, guys, but to go and do presentations. So I've been in all these different countries here. I'm still missing like places like South Africa, which I would love to go to one day and maybe host a presentation. Maybe I'll see you guys there at that point. So yes, I've been all around the world talking about trading. I've been on TV and things like that as well. All right, so let me show you something, some ideas that will make you think, okay? Because imagine you just wake up one morning and you want to become a builder, right? I want to build a skyscraper, or I want to become a doctor or a Michelin star chef, right? Now, what do these people have in common? They all have a systematic approach to their work. Like if you're a builder and you're building a skyscraper in a place like Mexico City, for example. I visited Mexico City last year. I also visited the Philippines last year. But imagine Mexico City, right? They have earthquakes. And if you think about the Philippines, where I was as well hosting talks, they have typhoons and they also have earthquakes. So obviously, the people working there, they will have special methods in the way they build their buildings, right? They can't just erect a building and hoping it's gonna last when they have earthquakes on a regular basis. And in the case of the Philippines, typhoons and hurricanes and floods, you name it. The same thing with a doctor. You go to the doctor tomorrow, that doctor probably spent 6, 7 years learning how to diagnose your problems and help you get better. And something as a I wouldn't call it simple, but something as food and being a Michelin star chef. Like everybody can cook. Well, most people at least can cook some simple stuff. But how do you get that perfect taste so people will pay premium dollars to eat your food? Well, they have a recipe as well. And we need to have that when we're trading as well. A lot of people don't realize that, but you need to have that. So what are the ingredients then? because a lot of people don't think about this. They have no clue. So I'm here to tell you guys what you need to have to be able to succeed in trading in the long run. Now, you need to have a systematic way of knowing of when to enter the market. You can't just wake up and say, hey, look at Bitcoin, I'm going to buy some, and you buy. You need to have a way as well of knowing where to put your stop loss. The stop loss is the level where you want to get out in the case of a loss. You need to have a good idea as well where you put your take profit. And in the case you want to short sell, that is when we make money on the markets declining, then you have to have an entry for that as well. Now, these entries, you're not always gonna get the best exit. You're never gonna get the best entry. But if you're a trader and you trade 100 times, then you're gonna get the best outcome across those 100 times you're trading. Now, a trader is someone, for example, that is trying to make money on the price changing from today to tomorrow, or just during the day, up to a week, up to a month, up to, I would say, almost 3 months. Afterwards, if you want to hold the position for long periods of time, then these things matter less. If you buy gold today and you happy to hold on gold for the next 5 years or 10 years, it's very likely that you might have made some money, you could have lost. If you invest something like in US stock market indices, like the S&P 500, then it's even higher likelihood that you would have made some money, because the S&P 500 is quite special. You see, it's the 500 best companies in the United States of America listed over there. So every year, and I think the frequency might even be more higher than yearly, but every time per year, a bit like a snake, it will shed its skin. So if you're not a 500 top company in the US, you get booted from that index and they put a new one in. So the list always keeps on changing. So effectively, you're always investing in the 500 best companies. Now, if you're doing that type of game, that type of investing, then yeah, all of this matters less. You can forget about it almost. But if you are trying to trade short term, then you do need to have an understanding of this. So when you leave this webinar today, try to figure out, because maybe some of you guys have a bit of experience, try to ask yourselves, do I really know exactly when to buy and when to sell? Like if someone wakes me up and tells me, you need to buy XYZ stock, do I know, or Eurodollar or whatever it could be, do I know how to manage that? If you don't have that, then that's obviously something you want to aspire to figure out. Now, we have tools like Signal Center. So Signal Center, they do provide this information for us. Signal Center is run by a team of analysts, and they have been producing research for many years. And they give us what they think is the best ideas, the best way of managing or trading the markets. So, and that's what we're going to talk about today. But again, if you walk away with anything today, remember this is what you need here. So who's behind Signal Center? Well, we have Joe, which is the Chief Investment Officer, and then we have Steve. So Steve is the Chief Operating Officer. Now, these two gentlemen, they established Signal Center in 2007. That's right, 2007. So they've been around for a long, long time. Before Steve, maybe, I'm not sure, I didn't know Steve in 2007, but I suspect he started out when he had hair on his head. And I have met Joe, and Joe has a bit of gray hair, so I'm sure when he started as well, he didn't have those. Long story short, these guys have been in this for ages, and that's beneficial, because when you work with somebody, you want to work with someone that has experience, as long as they keep on top of things, and they actually do that. Now, these gentlemen are regulated by the Financial Conduct Authority here in the UK. So that's our regulator. They're licensed to provide advice. There are not too many of these people that have the right to offer advice and at the same time promote and sell these signals. Now, these guys have been working with top tier brokers for a long, long time. They all qualify to have the different diplomas, but more importantly, they have the experience, which I think is more important because technical analysis, you can always learn that. But there's nothing compared than having skin in the game, actually been there doing the analysis and trading and evaluating your performance. So these two gentlemen has been around for a long, long time. And what they produce is this. So this is the dashboard that they have produced and that we offer via ThinkMarkets, all for free. So the dashboard looks like this, and you can easily change language up here. Of course, all you guys speak English, so this is not too relevant for you, but if you did want to change, you can always change the language up here. There are different type of orders. So look at the bottom, you have the live trade status. So you could technically go there in the morning if you wanted to, or whenever you wanted to go and see what trade idea is active right now. And then you can take a decision at that time if you want to trade it or not. And then you have many different other sort of statuses. Now, what these guys do is that they use pending orders. A pending order effectively means that you're programming your trading platform. So you put the order in when to buy and when to sell, and your stop loss and your position size, then you walk away. So they're using pending orders, which is beneficial because many other signal providers, if you guys ever tried them before, they will literally have WhatsApp or Telegram channels, and then you're sitting there working on some important project for your business or the company you're working for, and they send you a signal, but of course you're holding a presentation or you're talking with a client or something, and by the time you can get hold of your phone again, 15 minutes or 20 minutes have elapsed. So the idea that they share with you is too late to trade on that. Versus these guys here, they program things beforehand. So when you have a quiet time, maybe in the morning, in the evening, at lunchtime, whenever you have time, you can actually just enter here and you program everything. And not only that, with MT4 and MT5, there's a simple button. You just click on that button and it would actually copy all the details from the trade idea. So that's the statuses. And you got the asset classes. Maybe you have a thing for Forex or commodities or indices or crypto. You can filter here. You have the confidence gauge. So the confidence is just how confident the analyst is that this is going to be a profitable trade idea. So here to your left, you are looking at the Australian stock market index. They have a confidence score of 20 for that idea. And you can change the gauge there to actually see things that they have higher confidence score on. But let me tell you guys a little secret. I spoke with Joe, and Joe has analyzed all of the data that the guys have done over the last 5 years, and the confidence gauge doesn't matter too much. What is important is that you're actually trading and trading frequently. Now imagine you want to hit the gym, you want to become stronger, right? So you go to the gym. You can't just go to the gym once a week, maybe sometimes twice a week. No, you need to go there consistently, and you need to eat right, you need to sleep right, and you see your results over the long run. Right now, for example, I'm 38 years old, but I decided I wanted to learn how to draw. So I bought this drawing course, and it's 21 different courses. Now, of course, my drawing from day one compared with now is vastly different, like much better now. And it's the same thing here. I wouldn't focus too much on the confidence score. Rather, what you want to do is you want to get your trades in, because when you trade several times a week for many months, for many years, that's when you see your results. All right. But if you wanted to, you could filter the gauge up here. Let's move along here. So if you look at this image, you might be thinking, all right, if I click on buy, it's actually going to load that trade idea. But it's actually not that. This is a read more button, okay? So when you click on this button, it's just gonna load the information, and after here, you can take a decision if you want to trade or not. So I know there's a lot of stuff going on here. a lot of images, a lot of different numbers. Let me break it down for you. Up here, you can see the asset class. This is the last price, so the current price. And then you have the order. So this is the buy limit, which means they want to buy when the price dips. And this is the first target. This is the second target, and this is the stop target, the stop level. The same information is now displayed in a chart as well. So you don't necessarily have to read up here. You can visually just look at this. Now, if you know a little bit about the markets, you can make a decision here if you want to trade this or not. So here they're trying to go with the trend and they think we can go higher, and you can make a decision if it makes sense or not. The second bit here is that they have a bit of information here explaining the rationale behind their trade idea. They also have some volatility events to give you a heads up. So, when can we have a bigger move than usual? Now, this is a sweet little thing, but again, Joe has been telling me that this doesn't really matter too much in the long run. But there are certain occasions, like this Friday, we have the unemployment numbers from the US that tend to create quite big volatility. And then you have the central bank rate meetings, like the Federal Reserve one in the US and the European Central Bank. They tend to have a major impact on the Euro USD and stock market indices and commodities and so on. So you maybe want to be a bit careful on those days. If you are trading, for example, the South African rand, well, when the South African Central Bank is having its rate meeting, you want to be careful with the South African rand as well, because you have some big moves. Now let's move along here. You have some support and resistance levels here in the very bottom, which are giving you a bit more information. It doesn't necessarily link exactly with the trade idea, but is there. You also have the confidence, which you already know, and then you have the specific sentiment reader. Now, this is part of the Signal Center family group of indicators, but it's nothing you need to pay attention to because there's no link between this number and the trade idea, but it's just a neat thing there. What it's actually doing is that it's reading the information. Is the news bullish or bearish this currency pair? Yes or no? But I haven't seen a correlation between this number and the trade idea, because sometimes this number tells you to be a buyer, but the trade idea tells you to be a seller. So who should we trust? Well, I would argue just trade the trade idea, because I asked them, and this thing doesn't actually have to be on there. So what else? So you see this little button here. I actually skipped this one. So there's the MT4 and MT5 MetaTrader 4 platform. Let me know if you're using that one, or if maybe you're using the Signal Center. You can just drop something in the chat if you want to. This is offered here, and we actually just introduced it to what we call ThinkTrader, which is our proprietary platform. And this is actually super easy because you don't have to manually write this down on a piece of paper or keep it in your head and then create the order. You literally just click on Trade Now, and then this little box is going to populate, and this is going to literally, everything is pre-filled. So you just need to decide on how much you want to buy or sell. I'm just putting out a question there. You can reply if you want to. So yes, it's very straightforward, really. You just go to the volume. So effectively, you log in every morning. You decide, okay, this is what I want to trade. This is what I want to trade. Then you place a button. So why did we opt in to trade with and work with Signal Center, really? Well, it's because of the transparency that they offer. Most signal providers, and there's a ton of them out there. If you Google, you'll find them. They're going to offer you riches beyond your wildest imagination. But the problem here is that they don't offer any data. You ask them, so how did you perform? And they'll send you numbers over the last couple of weeks, if you're lucky, a couple of months, but they don't have too much data. These guys have 5 years of data. So they collected all of their trade ideas from 2017 up to March 2023. So we're talking about 16,000 trade ideas, like 16,000. There's so many. So whatever they're doing, I personally think is less likely that it is random. Does that make sense? Because if you do something 2, 3 times, yeah, it might be just bad luck. You get mugged one day and then you get mugged the week afterwards. Well, maybe bit random, unless of course you entered some rough neighborhood at the wrong time of the day, right? Then you increase the probability. But it's the same thing here. You will have certain traders, like this is actually super interesting. Okay, so the chat has been disabled. Okay, we can use the Q&A section here. All right, Think Trader says also. Okay, so think about this. Did you know, guys, on Twitter right now, there are people that became millionaires on trading crypto. But if you ask them for their story, they were literally like a couple of minutes. This one guy, he made, I think, maybe $1.5, $2 million. He was literally like one day of losing all of his investment. And it was pure luck that he made all that money. And now, because he made one good investment, everybody thinks he's a guru and everybody's like listening to what he has to say. But that doesn't mean that he really knows what he's doing. I would argue that just means that he had lots of luck. But these guys have been trading and they collected their results for 16,000 times. Like, how likely is it that all of that is just random stuff? And that's why I like these guys. They have all that data. So before we look into the actual numbers, let me just explain a little bit of how it works, because not everybody is as skilled. Everybody's at sort of different levels. So let me talk a bit about return. That's probably the easiest thing. Imagine you have $1,000 and you invest and you have 100% return. So literally you invested $1,000. 1 year later, you have $2,000. Simple as that. And then you have something called the drawdown that could become a bit complicated. So the drawdown is a way of measuring the risk in the portfolio. So here, for example, if I invested $1,000 and then I had a drawdown of 50%, then that means that I dropped from 1,000 all the way down to 500. Okay, that's my drawdown. The drawdown is also relative, right? Imagine in the first year, you make 100%, you're now at 2,000. Now in the second year, you drop from 2,000 to 1,000, and then you go up to 3,000. Then you had a drawdown there because you went from 2,000 to 1,000 of 50% once more. So it's really important, that bit, because that's what I'm trying to explain to you here, guys. Like this gentleman or this guy online, because actually, yeah, well, it is a guy. He was literally seconds of losing all his money. So he had a drawdown of like 99% or something like that. He couldn't sleep. He had to put on these videos which shows like the sound of rain. He had to listen to that for several weeks because he was so close to losing all his investment. So he had a huge drawdown. So always when you pick, either if it's a signal provider or if you're picking any money manager or something like that, or you want to learn someone's strategy, just ask them, what's your drawdown? And that is another word of just knowing what your risk is. Because this guy here, he had a huge risk. He had a huge drawdown, probably like 90% drawdown. So massive drawdown. But because he was lucky, he actually managed to make some money on at the end of it. So this is important to know. Now the win rate is question forward. You trade 100 times. If you win 40 times and you lose 60 times, 60 out of those 100 times, then your win rate is 40%. If you trade 100 times, 50 are winners, 50 are losers, then it's 50-50. The average risk to reward ratio, the average RR, is the average reward versus your average risk. So imagine we're playing a game. Now, every time you win $2, and every time you lose $1. Your risk to reward ratio at this time is 2, because 2 divided by 1 is 2. Now, imagine we have a different game where you win $1 each time you win, and you lose $1 each time you lose. At that point, your risk to reward ratio is 1. Okay, this again is an important concept. Trades, well, that's just the number of trades. Like you trade it 100 times, you trade it 1,000 times, you trade it 20 times, and so on and so on. So now we know a little bit about the performance. Now, let's take a look at the results that they produced. Okay, so they traded roughly in the last couple of years, they traded several times. And the markets that they did really good on is this. If you want to grab a screenshot, this is the time to do that. So they produces good analysis in the DAX 40, the Nikkei 225, the Japanese stock market, the Nasdaq 100, and the China A50. All of these are markets that ThinkMarkets offers. In the Forex space, they offer really good signals in Australian dollar versus the Japanese yen, and the euro against the British pound, and the euro against the New Zealand dollar, and the dollar against the Swiss franc, and in the euro against the Swiss franc. In terms of cryptos, I'm not sure if they're being offered in South Africa, but if they are, then Bitcoin is good and Ripple is good. And in forms of commodities, they're really good at silver. Now, this doesn't mean that they don't give you a Euro USD outlook. It doesn't mean that they don't give you a gold outlook. And on top of my head, the Euro USD outlook was profitable, but it wasn't good enough for me to actually put it into this presentation. Now, if I would have taken my money and only traded these ideas that I'm sharing with you guys here, and I would have a risk of 1% per trade, and I'll explain more about that in a minute. But if I would have just had 1% risk per trade, then I would have a return of about 400% with a drawdown of 19, almost 20%. So over this period, to give you a bit of comparison, if you take your money and you would have bought the S&P 500, like a CFD or like an ETF, over this period, you would have made maybe 85% return, probably a bit less because of the financing fees. Here, you would have made 400%. Now, again, we need to relate the risk, right? So what was the drawdown in the S&P 500? The drawdown in the S&P 500, because of COVID and last year's slide, they had drawdowns much deeper than 19%. I think one was 25, 30% during COVID. I think it was something like that, COVID, and about 35% of the value of the S&P disappeared. So on a relative basis, you're making 4 times more money trading the signals with a lower risk compared with trading the S&P 500. So what's the catch then? Because there is a catch. But with the S&P 500, you only press buy once and you make 84% return over this period. Versus here, you need to actually do a bit of, you need to log in the morning and choose the trade ideas. Simple as that. So there's a bit more work here involved, but the return is higher. Now the win rate is 46, so slightly lower than 50%, but the average return is 2.35%. So imagine that the win rate was 50, okay? So when I win $2.35, and when I lose $1. So if my profitability rate was 50, each time I win, I take 2.35% steps forward, and each time I lose, I take 1 step backwards. Because of this, even if I'm slightly below 50-50 here, I will still get ahead because each time I win a bit more. In fact, 2.35 times more than my average loss. So this is super important. So what do I mean with 1% risk per trade? Now, again, this is a technical thing, but it's really important actually. If you do want to become a trader, this is good to learn this. Like, you don't have to know this, but it is good to know this, okay? Now, to give you an idea, imagine I have an account with $3,000 and I lose $30 each time I get stopped out. Well, 30 divided by 3,000, that's 1%. So what does that actually mean in when I'm actually trading? Well, imagine that I'm buying here. This is the S&P. So I'm buying it at 3,980. And then the signal tells me, all right, you need to put a stop loss below this low. So this is your risk. So when I buy here, and if it goes down here, I should only have lost 30%, sorry, $30, which is 1% of my account. So how do you adjust for this? Well, you need to adjust, you adjust the buy size, okay? So you adjust the buy size, and that will help you buy the right amount. Now, if you're on MT4, MT5, it's a bit more complicated. There's no question about that. But if you are on Think Trader, then it's far more easier. So I'm going to try to show you both so you can figure out yourself what you like the most. So that's what I mean with 1% risk. So long story short, each time I lose 1%. Simple as that. So if I just lose 1%, then my drawdown is almost 20% based on historical data. And if I'm happy to risk a bit more, I can risk up to 2%, and then my drawdown is going to be 38.2, but my return is going to be 690%. In this situation, $1,000 becomes $6,900. So you can actually increase the risk, but I wouldn't go with higher risk than just 2% because your drawdown can become so big that you might give up on trading and be like, oh, this is too high volatile and I don't want to do this. So how can you get going then? So some of you guys like Alton here, he's telling me in the Q&A that he's using ThinkTrader, and we have Mugudi telling me that he uses MT4, and it's very straightforward. If you don't actually have an account with us yet, you can actually just open one. It's free to open accounts. You can deposit money, you can withdraw money as you want. There's no fees at all. And when you are a client, just click on client, log in, and in the client portal, you can download the MT4 indicator. You can also access the online dashboard like this. So it's the same information. It's just that here you download the indicators that you install, and here you you actually can see the signals on the dashboard. And now as well, we have it on Think Trader. I'll show you that in a minute. If you want to give us a try, want to give the signals a try, just click on create account, go to thinkmarkets.com, click create account, and then create live account. And then usually just need like a passport or some sort of ID card, proof of address. But I think all of this is changing actually, so you don't even have to have that. You can have less. Now, Signal Center, obviously, they are profitable or they have profitable trade ideas. So we do pay them, all right? So we do pay them, but you guys don't pay nothing. But because we have to pay per user, and the way we make our money is each time you buy or trade something, we make a bit of a commission based on the spread. And so we do have minimum deposit requirements of 500. Now, again, you just have to have that on the account. You don't actually have to. Nobody's forcing you to trade, and nobody's telling you you have to put $500 at risk. You can trade as little or as much as you want. So let me show you a little bit here how it works. So let's see if I have it here on my MT4. So okay, this is the MT4, and when you have installed, after going to Think Trader, I'm going to show you a Think Portal. You're going to find Signal Center here, and you literally just have to drag it and drop it. It's as simple as that, okay? You drag and drop it. It's as simple as that. Let me see, like that. So whatever you see here depends on the asset classes you have loaded. So I do recommend that you click on Show All Symbols. So say here, for example, we talked about dollar Swiss franc, that being a good market to focus on because that's what they do good. You can, again, start to filter here as you wish. But let's see if I can, yeah, let's actually filter for it here. Otherwise, I think I'll be looking for a while. FX, dollar CAD, not the one. Here we go, dollar Swissy. Okay, so their possibility or probability of being profitable is 20 here. Here we go. So you see this bit here. So again, they want to be buying dips. All right, and it's super straightforward. Just click on trade now. I need to choose how much to buy, and then I click on place order, and then it will be go there. Now the problem with this, if you're using MT4 and MT5, is that you don't actually know how much this is. So you need to, like, I think every MT4 and MT5 user has at one point figured out a little bit how much this is in money and how much you're risking. So when you know that, you put the levels in here. There are, of course, other ways of doing this. So if we can go to ThinkMarkets. So again, client portal up here. So here, for example, if you did want to create a Think Trader platform, it's super easy. You just click on create new live account, and then on funding, you just transfer the money from one account to another. Simple as that, okay, guys? Create live account, and then choose whatever you want, okay? Now let me load my Think Trader platform so I can show you what's going on here. So here we have the signals. So you click up here. So here, for example, let's see if I can filter here. Asset class, Forex, and then I want to close my filter, see if I can find what I'm looking for. Dollars we see down in the bottom, yeah? So you have the two different orders here. Now, something I forgot to mention, in their analysis, they will actually book profits by the end of the 24 hours later. So if you look here, this idea usually lasts literally just 24 hours. So when they did that trade idea, so here, for example, they have a trade idea here. They would go for take profit 1, and then the next day, independently, if it's in profit or not, they would just close the position. So it's the same information as I showed you before. It just shows like this. So you can read a bit here, and then you have to take profit. So let's just click here. So if I click here, you can actually see that the data has been loaded here. So let me see. I think I should be able to click on, yeah. Okay. So you see this. This is the idea. So this idea, I think it was published at 6 a.m. this morning, and that's why it sort of is lagging a bit. But you can see, right, this is the buy limit, this is a stop loss, and this is a take profit. So I can scroll down here. So you see here, I can actually look at my amount, and because I have my stop loss and everything enabled here, I already know how much I'm looking to lose or make here. So for example, in this account, you see here, I got $1,500. So if I load my calculator, so I want to risk, say, 2% of this account. So that's 1,500. That's $30. Okay. So then I can just adjust this. I just adjust this upwards. Whoops, got a bit too much there, didn't I? Should be something like this. Oops. Yeah, you see, I need to open a 10K position, and then I click on confirm buy, because this is gonna match roughly $30. So if I click on buy now, place order. So I have this created. If you go back to the trade now, you can actually see your orders down here, and that's the process, really. So simple as that. Let me see here. Yep. So this is you'll find these bits and pieces here on the Signal Center. So if you want to download, you would just click here. Now it says fund me now because it's reading. I have so many accounts, and is reading my last account, and I have no money in it. So if you don't have any money in it, it doesn't read. So you can just make sure you have $500 in one account, and then it's usually works out. So that's it, guys. That was the presentation I had for you guys. The chat is now open. If you have any questions for me, let me know. I'm happy to answer them. So again, very, very straightforward. Creating an account with ThinkMarkets is extremely easy. It doesn't cost you a penny. Nowadays, everything is automated. So as long as your password or ID is in a good shape, the system will find you and they will literally process your account. So you will take maybe 2 to 3 minutes to open your account. If the machine that they use, this software user, cannot read your passport ID, then there's a team that actually does that manually, and these guys work 24/7. So within 24 hours, your account is usually up and running. Then you just fund your account with at least $500. I do recommend to deposit a bit more. And then that will give you access to the signals. And then you can monitor or you can trade, it's up to you. That way you can see how it works. This is a very good question. Let me see here. My ThinkTrader on computer Neuron app has iPhone. Yeah, that's right. So the signals will be added to the phone, but I don't know exactly the timeline for that. I suspect it's gonna take a little while, guys. Okay, so it's not gonna be happening from one day to another. The reason for this is that the technology behind the web trader and the mobile is actually a bit different. But what you could do there, Alton, is that uh, you could technically you can still log in. I think I tried it once. So you can still log in. So let me see if I can share this with you. So you should be able to log in to ThinkTrader Web. And then from there, you can access the web version, but it's just that it's on your phone. So I'll share it now in the chat so you can see it. I hope you can see it, and you can try that. But when it physically enters into your actual app, I don't have a timeline for that, but I would suspect maybe later this year. You could also, again, as I mentioned to you guys, if I would go forward and only use the signals, I would primarily focus on the ones I mentioned to you guys, so I can share that with you. Of course, it's up to you what you guys want to use. But yeah, these are the markets that have historically worked in the past. That doesn't mean that it has to keep on working in the future, but what would you do? Would you use something that's been working for the last 5 years or something that has not been working for the last 5 years? Awesome, good. Alton is telling me that the link worked. Yeah. ThinkTrader Web is literally what the guys are focusing on the most. Mobile, of course, we have teams for that, but most of the new things are added here first. We have an awesome calendar that I think you should check out. It's really cool. So if you guys, looking for events, like separate type of trading, but if you guys just wanted to know sort of, what can move things. For example, if we look at, we have the known from payrolls, the famous known from payrolls coming up on Friday. So here, for example, you literally just click on this and then you have a ton of charts. So you have sort of how has it performed. So you can see sort of over the last couple of months, the known from payrolls has been like ridiculously strong. So you can see that. So the histogram, the purple is the outcome versus the yellow was the forecasted outcome. You can click on the price chart here, so you can literally see, how is it impacting my market. So let's see if I can find. So I know you guys probably trade Euro USD, but let's take a look here how it impacts, if it has any impact on South African Rand. So you can see a bit like an overlay here. Does it actually mark the turning points here, yes or no? You have the volatility here. So how does it impact the dollar South African Rand? Well, in the last couple of months, 75%, the last 12 months actually, the last time, the dollar South African Rand actually traded higher 70% of the time. On average, you have all these different, this is your average range. And I've loved this. Look, you can actually change here. You actually change here. So what happens like 1 hour after the event, 5 minutes after the event. And I love this bit here because this is amazing because look, you can actually see this is when the data was released. You can actually see we spiked all the way up. So we had a range of 1,288 pips, but at the end we ended down here, and you can actually see here. So this was the actual outcome versus the forecasted and the previous. And you can go click backwards there. You can see, like, is it really the best pair to trade or not? Like here, for example, we got a beautiful reaction. So here you had like a crazy good non-farm payrolls, 517K versus the forecast of the 190. And you can actually see here. So you can learn from this and sort of see how the market reacts or not. Like last time, I did an article. I think it was, yeah, I think it was maybe not last time, but maybe like 2 times. No, yes. I think it was last time. I did an article about non-farm payrolls, and I told people, like, if you look here at the impact, like 4 hours after the event. Let me see here. No, it's not this one then. All events. Yes. Above forecast. I think if I remember correctly on top of my head, I remember this though. My memory is not as good as it used to be. But I remember, so what's interesting is actually when I did the data analysis, when I looked at what happens over all the last couple of years, when the data was actually better than expected, the euro tended to go up, which is contradicting, but it happened well in the last 12 months. So when the market declined here, which it should did, and it did decline because the data was better than expected, I kind of knew, at least the data was telling me, that this was not going to hold. It was going to turn higher on the basis of that. So you can use this information to create different strategies around news events. So the guys, they do gold, right? So they offer gold signals. Like if we take a look here, it's just that it's not that it like if you look here, so they have a buy limit in gold. So they want to be buying. Let's see if I can adjust this. So they do want to buy this dip. Okay, they want to buy this dip. But the thing is that over the last couple of years, the signals were not good enough, according to me. So I did a filtering here. But they did really good on silver. So maybe what you can do, if you think about it logically, there is a correlation between gold and silver, right? So, you know, maybe one could focus on the trade idea in silver instead of gold. You're almost getting the same thing. It's not huge difference. Sometimes, of course, silver is going to deviate. But yeah, the data shows that they're better on silver than gold. And sometimes, I know it's a bit weird, but dollar Swiss franc has like an 80% correlation with Euro USD, but the dollar Swiss trading worked better. So it worked better for them. They did better analysis in dollar Swissy than on Euro USD. And maybe it's because of the system. So they use some sort of a system, of course, to figure out if we should be buying or selling, yeah? But maybe the volatility of the individual market is better suited, because the volatility in these markets is like all the markets have their own little characteristics, right? If you think about it, who's trading dollars Swiss franc? Well, people that trade dollars, and then you get the Swiss banks, right? Who is trading Euro USD? Well, you got all the US banks, all the English banks, but then you have all these European banks that are trading it. And then if you look at British pound, there's people trade the dollar and the British banks. And then who is actually trading in the South African rand? Well, it's all the South African rand, all the South African banks and the South African central banks, plus anybody else that wants to trade the dollar. So because we're looking at localized markets, although the different currency pairs are a little bit different, yeah, and they just happen to be better in dollar Swiss franc than Euro USD. And they just happen to be better in silver than on gold. Okay, guys, I want to thank you so much for joining me. If you have any questions at all, just contact the team. If you are in touch with the sales reps in South Africa, let them know what you thought about this presentation. It's always nice to have a bit of feedback. And yeah, I hope to see you guys soon. We're hosting another webinar most likely next month. It might be the same topic, it might be a new topic. We're still figuring that out. But yeah, I hope you guys can enjoy the signals. And yeah, if you have any questions, just call the team. They're ready there to help you out. Thanks so much for watching. Thanks so much for your time, and have a good evening. Goodbye.